Some peace gang signs. What is up? Say hello to the chat. Da, 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 da. Da, 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 da. Well, apparently SPY's off the chain. You gotta love the markets. The economy's fine. There's nothing to see here. Goodness gracious. Let me get over in this alpha trading Discord. Why are we messing around? There we go.
Yo,
everything's fine. There's nothing wrong with the economy.
yes, everything is fine.
Yeah, we're good. SPY is just running to, dude, pretty much insanity. I mean, it's literally almost back to the all-time high, man. Of course it is. Why wouldn't it be? What is it, 20 points away or something crazy? What was the all-time high on SPY? Let me see here. Let's pop over. Get us a macro time frame here. Yeah, I've been watching this pre-market just laughing. That's all you can do at this point is laugh. All right, SPY, where'd you peek out at, baby? Pretty sure it was like 480, man. About 480. Yeah, we're about 40 points with this pre-market move. Look, this thing, I even talked about this. Run into the reverse fissure. I mean, hell, it's almost here. Almost here. So what, 439.76? 439.76. Wow, man. Yeah. We get some new levels today. We'll see what distribution levels that number's at. Now, remember, we're going to have a new daily range down here. I talked about this yesterday. You know, is SPY going to run away from this weekly range? Look, guys, look at the last 15-minute candles before the close on Friday. We talked about this. This is literally a test. Okay? You run it down like that right before the close, and a wick goes right to the weekly range. You don't think these algos know where these levels are going to populate at? Of course they do, man. They're using the same tools we're using, right? They're using the same math. They're using this. I guarantee you there's somebody looking at this week of price action, right? And they're finding where the new weekly range is going to populate. It's pretty much the only way to do it, right? You got to be really good at this. And yeah, man, I mean, they literally nailed it. Not saying it can't come back down here and test. You know, they just running this price to the top side, get everybody in a bad position, then dump it. Who knows, man? This is some tricky times. There's so much corruption going on across the board. Just got to be careful. Another reason why we trade low time frame volatility. The reason why I trade 0 DTE options, right? Quick moves, man. Quick moves. Like yesterday, I think I bought a couple. What did I buy? Pretty sure 429s. Yeah, 429s, like right around the bottom of the weekly. But yeah, got out of them immediately. As soon as it closed this candle above the 68.3, bam, I was out. I mean, you could see the writing on the wall. Pull back here, boom, bounced right off top side of the 68.3. First standard deviation move yesterday. Powerful on SPY, man. Really powerful. Now look at it. Guys, this is going to be up by probably 1 SD on today. Might even be pre-market above the first standard deviation. And remember, if I'm talking about standard deviation, I'm talking about normal distribution. If I'm ever talking about Laplace distribution, I will say Laplace. And that's the white cross lines and the smaller white lines. The small ones are 4-hour, cross lines are daily. As you can see, all day they're going to stay in the same spot. Every 4-hour candle, you're going to get a move in the 4-hour distribution. Good stuff. And first off, I want to appreciate all the support on TradingView, people watching the streams. Hopefully you're getting something out of this. Even better, come into the chat, join the Discord. You can ask any questions you want. You want assets looked at? We'll look at them. It's not a problem at all. That's why we're here. We're for you guys. I'm not doing this for my health. That's for damn sure. This takes a lot of my time every week. But we're doing it for you. Show you guys the tools we've created, right? The alpha trading, the coder wolves, man. They're powerful. Very powerful. Yeah, good morning, Casey. So yeah, that's why we are here. We are here. We are traders for traders, right? We don't have an agenda. We're not trying to extract money out of our community at all. You will not see any affiliate links anywhere. On our website, in our Discord. That's not what we're all about, right? Number one, we're not going to on-ramp unsuspected traders, first off, on the leveraged crypto exchanges. I mean, I don't trust these exchanges to begin with. Never really have. It's not a regulated market. Why do you think the SEC is suing altcoins? And I mean, you're suing. Who are you suing? Especially Cardano. Cardano is very, very, very decentralized. I mean, it just cracks me up. You know, they can't go after anybody. So what? They're just going to sue, right? There's no fines to be handed out. There's no regulation. They're trying to regulate the on-ramps, which they're doing a damn good job. And this is the problem with these centralized exchanges, right? They just crush the ethos of cryptocurrency. Pretty sad. And people, and this is what they do, right? Over time, there's new people coming into crypto right now that don't even know what the original ethos of cryptocurrency is. They're just like, oh, what's this crypto? Oh, this is great. Oh, look at this great exchange. It's just crazy, man. It's all about decentralization. All about decentralization. The more pressure that these three-letter freaking agencies put on crypto, I'm telling you, man, this is going to spark the decentralized revolution. I see decentralized exchanges popping up. We got to get liquidity in these things, right? Peer-to-peer trading, man. Trade from your wallets. Screw these centralized exchanges. They do not have your best interest. If you think they do, you are living in a la-la land. Just like anybody in business. Yeah, they are trying to make money. You talk about trying to extract money from their community of traders who are using their platform. They're literally trading against you. They are trading against you. This is out in the open now. People continue to do it. People continue to put stop losses in the system. People continue to use leverage. You understand that they're running algorithms? Every time you use leverage, every time you throw a stop loss in the system, you go right into that basket. Right? Where everybody else is doing it. They wait until a level is filled up. I don't know what the percentages are, right? I'm not running that scam. But there is, when you see these big wicks on the low time frames, that's exactly what they're doing. They're knocking people out, they're stop losses, they're liquidating people if they're over leveraged. And the degens in cryptocurrency just continue and continue. There's a reason why these exchanges do this stuff. Because they can. Because you're giving them the opportunity to do that. And you're giving them money. It's ridiculous. Meanwhile, you could be trading the traditional markets. This thing's running like a bull. That's right. They're not going to give your money back. It's crazy, man. Anyway, ran over. Daily chart, long entry, whether there was stop. Well, Casey, the only thing I don't like about that is just having a stop loss in the system. Not only crypto exchanges, man. When you throw a stop loss in the system, you are a target. It's like raising your hand up saying, here I am right here. You know, you get enough people loading up stops in that area, it will get taken out. It will get taken out, and that's what happens. 447, huh? What are you seeing up there? Because, yeah, I'm actually, if we're looking at a weekly chart, you got the reverse Fisher up here. This is a cap. This is a cap on price action. We get the new distribution levels today. We'll take a peek. I want to see some weekly levels. Yeah, I see what you're doing there. 26. Let me see something real quick. Woo! He's talking about running. Let's see. Now, this is going to probably, that's going to be, I would imagine, let me pull this up. It's going to be a monthly level here. 44. You're getting close. There's 44 and a half. And that is the monthly, blah, 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 blah. Let's see. Yeah, there it is. There it is. Let's see now. 1, 2. That's the top of the monthly range. As far as it happened in this month, man, I'd be real careful with that trade. Because there's a very low probability. I'm talking the next over 2 weeks of this month that you're going to close above 444. So yeah, just be careful with it. And I would definitely, and I don't swing trade volatility in SPY right now. packed full of volatility, man. But yeah, hey, if you're making money, good on you, man. Good on you. Yeah, I don't know exactly what targets you're looking at with those numbers and stuff, but I'm going to check it out when we get the new daily open up here in about 20 minutes. And just like we tell everybody, hey, man, feel free to join the Discord. You can literally get into the voice channel, right? You can speak on this stream if you'd like, ask questions. We recommend it. We will help. Let's see here. But yeah, a lot of people, hey, man, if you're out there and you have your own trading strategy and it's working for you, and you're just looking for a cool stream to listen to in the morning, laugh, have fun, joke, you found the right place, because we do a lot of that. And I know when you're trading, you're alone, you're sitting at your desk or whatever, it's fun to listen to some stuff. I do it all the time. But yeah, if you're here to really learn how to trade low time frame volatility, you also found the right place. So congratulations. Congratulations. I mean, we've been on YouTube for years, but when you're shadow banned, really hard to find us. There's a huge red flag, that they do not like what we're doing. Small community, but when you're putting forth this type of information, yeah, man, it put it this way, it wakes up some suits. They do not want this information out there. I'm telling you, man. They don't want people knowing that these big algorithms are trading the distribution, because the distribution itself, it's very simple to learn, right? There's just different probability levels. When you understand the probabilities, you got a leg up on 99.9% of traders, because most traders do not even know you can trade the distribution, let alone know where the levels are, have a correct indicator. There's people out there trying to create, these probability levels on these platforms. Problem is, the math is incorrect, right? The math is incorrect. I can say that with confidence, right? Because there's only one other person besides our camp that I've ever seen do it correctly. And that they were using their own math, not the math provided to them by the platform. There's a little secret right there, right? For you, TradingView, if you're listening, your math is not right. But that's okay. That's okay. Somebody coming in, lower than expected this morning. We had probably pushing their interest rate hike tomorrow. Yeah, man. Yeah, I mean, it has been. You can see the market. They're front running this. They're front running this since the middle of last week. Bears are trying to push it down last Friday, bounced right back up. Like I said, they pushed it down to test this weekly range. Now it's running. It's off the chain. We could literally, by the end of the week, see the all-time high again. I mean, guys, it's close. It's not that far at all. What I say, 40 points? They could do that in a few days, man. Really good. Let's see here. But yeah, I agree with that. I mean, the thing is, though, I just trade. I trade the 0DT options, low time frame volatility for me, for sure. I'm not swing trading anything, right? If I'm going to swing trade something, it's going to be futures. It's going to be freaking commodity futures or something, right? I'm not going to mess around with these super hyper volatile assets, especially in this uncertain time with the economy, right? People are like, what the hell is going on? Well, you can see what's going on. It doesn't matter what the news says. It's only buyers and sellers. People are buying, man. People are buying. They're jumping on this train. Be careful, though, because the algos run the show. They can run this down just as fast. 13. All right. SPY. So let me see something here. Pop this on a monthly. Wow. Wow, wow, wow. Whee! You can see even on the monthly, right? This pullback, the last big pullback, right? There was the scamdemic. Remember that when they literally psyoped everybody into wearing masks and locking yourself in your house over a cold? Total joke. People are like, oh, it's all about money. It's not about money. These psychopaths don't care about money. It's they literally shut down the world economy. Do you think they really care about the money? This is all about control. They want to see who would comply with this madness. Most people did. Most people complied. Most people got the jab. Now the truth's coming out about all that. Yeah, man. Wasn't a good idea then. Not a good idea now. Let strangers poke needles in you. Here's the top side of the power mean band, though. 443, 444. So on the monthly top side of the power mean band is literally the weekly reverse Fisher. So that area I could definitely see getting tapped. Now, can it shoot outside? Guys, back here, after that scamdemic dump and it ran to the all-time high, it was outside the power mean band. Never even checked up until the high. Then it pulled back, right to the reverse wave trend. Boom, get a little checkup right here. And then dipped. This late low it just crushed right through the bottom of the power mean band. Pulled the candle up, closed right at the reverse wave trend. Rest is history. It's making its way back up top side of the power mean band again. Not even, let's see, we're not even trending. This is all a random walk. Last trend on the monthly time frame was the run up to the all-time high. Since then, it's been nothing but a random walk. Look at the volatility. All the volatility is contracting on a monthly, negatively correlated. This is usually volatility ebb and flows. You get a contraction, negatively correlated. The price action starts walking up. That's what you're seeing here, right? Then this can ebb and flow into volatility expansion, positively correlated, and a pump. This is usually how moves start. I don't care if you're on the 1 minute time frame or the monthly time frame. If you really want to see this in action and you have these indicators, go to a 1 minute time frame, use the replay function, and watch the volatility magic, because that's exactly what it is. It's magic, man. Let me see here. Let's go to a 5-day. Yeah, 440 up here on the 5-day, which is what you should be looking for if you're looking at a week. So yeah, 440, huh? I mean, guys, we could hit that today. Can't wait to get these new levels. You got to remember, there's going to be a daily range. This pre-market, I seriously doubt that this data set gapped up through the daily range. I mean, I'm talking about probably center of the daily around 433. I mean, guys, we're up here, what? Over 3 points above that right now. And like I said, we get the new daily open. We're going to be up around the first standard deviation. It's going to be close. I'll tell you that. It's going to be close, but now it's pulling back a little bit. Hell, it was up above yesterday's 95.4 Laplace. I think it was up here about 436.5 at one point. Now it's pulling back a little bit. The Hawaiian Wallaby. These are the VEPS, man. Volatility, entropy, probability, and statistics. This chart you're looking at right here is price action volatility ranges and normal and Laplace distribution levels, right? All our indicators are built on returns, right? We got volatility. We got entropy. We got pseudo Laplace z-scores. We got a returns oscillator, and one of the purest indicator you could possibly ever have, variance. Variance is the spread of data around the mean. What is it? The standard deviation of returns is volatility. This is all we care about. And when variance never goes below zero, variance only expands and contracts, right? It is volatility. And so we have created this indicator where when variance starts to expand, right? When data starts to expand, direction. A lot of people say volatility isn't directional. Well, these are the same people that don't understand volatility or how to use the tool properly and how to correlate it. When you usually talk about correlation, people are talking about correlating assets. That's not where the correlation buck stops, man. You can correlate indicators to price action, especially volatility, entropy, the returns oscillator, right? All these things are correlated to price action, gives you direction. So yeah, hopefully that answers your question. But if you're new, keep watching our stream. You'll get it. Join the Discord. You can ask questions. We don't charge any money. We're not here to extract money from our community. We have a free volatility starter pack that we'll give you for free. It's got some basic indicators, and then we literally have a 2-week free trial for all of our indicators. And I'll be the first one to tell people, don't just rush right in here. Oh, new shiny toy. Let's buy these. No, I would rather you not buy our indicators. How many other like YouTube Jimmies out there are going to tell you not to buy their indicators? That's the first thing I tell you. Don't come in here and buy our indicators, because volatility trading isn't for everybody. There's literally such a small probability of traders that trade this way. Guess what? You know who they are? They're the high frequency trading firms. This is what they program their algorithms with. That's why even our YouTube channel shadow banned. That's why we moved to TradingView, where the real traders are. And we know TradingView is going to give us a level platform to work from. They're not going to shadow ban us or give us shit. You're right. They want people streaming on the platform, bringing info to you guys. Here we are. Here we are. What time is it? 9:20. Make sure I get this brokerage account up.
Traditional technical analyst who is always right. A historian.
Yeah, like he said. What do you think, Yasha?
What do I think? I think you're saying good things, man.
You're the man.
It's good. It's good to have a voice of reason.
Yeah.
In the trading space for retail traders, and it's good to be not shilling garbage onto people and trying to just maintain the grift that is so institutionalized.
Yeah.
And ironically, it is institutionalized by the very same people that use the very same maths that we use, and they just want to keep pushing down the line the garbage so that the people at the end of the line get wrecked and give them their liquidity, because that's how they collect.
Yep.
So yeah, that's how they collect the retail money anyway.
Right.
Which is a good chunk of the money on the market. You know, it's a good chunk of the available liquidity on any given day is the retail traders who think that going with the herd using lagging indicators is somehow going to make them outperform the market when the market doesn't consider those things to be valid really at all. And when I say the market, I mean the people that run the majority of the trades, and that's the high frequency trading firms, obviously. So they are literally moving the markets. And when people say, "Oh, it's market manipulation," yeah, every trade is market manipulation, and them that has the most move the most. So if you think you can outperform the people that have the most by using tools that they specifically push down the line because they know they're garbage and they don't tell you they're garbage, and they push them through a bunch of different people and organizations, well, then you're kidding yourself. And if you are in that 0.5% of people who happen to use those tools and are able to be somehow consistently profitable, congratulations. But the other 99.5% of you, look yourself in the mirror and you tell yourself the truth. You know what the truth is. You're one of those people getting wrecked. And there's no reason for it other than you've been duped by a very sophisticated system that uses your liquidity as a source of their funding. And they love it when you go and you think you're being smart and you're using moving averages, simple moving averages or exponential moving averages or order boxes or fibs or wedges or other silly patterns and things that they quote unquote teach you. They're just teaching you garbage. And if you spend a lot of time learning garbage, sometimes it can be hard to unprogram or deprogram. But if you spend all that time anyway learning garbage, you've trained yourself well to do poorly. And there are ways to undo that. One of the easiest ways to undo that is to stop trading. The other easiest way to do that is to learn a better way to trade. And that's what we offer. So,
yep. And this is age old too, where you always hear manipulation, manipulation, manipulation. Every time there's somebody out there that has more money than you that can move the market, people cry manipulation. It's not manipulation. Yeah. It's not manipulation at all. Some people just have bigger bags. Here's what levels the playing field.
And somehow when they get a great trade, they're like, "Oh, I'm a great trader." Yeah. And when they get wrecked, manipulation.
Yeah.
Well, which is it?
The only way you can level the playing field is with your mind. Right? There's the level playing field.
And with the right tools and information.
The right tools. Exactly. The right tools, the right information, speed. Right? That's why we trade low time frame volatility. And also what we teach here, and this goes for, I don't care what strategy you're trading with. I don't care if you have a pet monkey throwing darts at a dartboard. If you're not emotionally attached to your trades, that allows you to, first off, limit your losses. Second, take your profits. That's all this is about. If you can just take your profit, limit your losses, and not be emotionally attached to your trades, and don't give the algos a chance to take your money by swing trading volatility. You see everybody out there, they're teaching people how to swing trade. Swing trade is a really bad idea. They use that against traders, especially in cryptocurrency. Why? Because they know how many people in crypto are total degens. What happens if you let a trader sit in a trade a long period of time, and it's on a bull run, it's on a bear run, whatever's going on? What is that degen going to do? They're going to hit in that. They're going to add on. They're going to continue with every move to add more leverage. While that liquidation point sneaks right up, everybody starts, their liquidation points are starting to line up. People have stop losses in the system. That's when you get these big liquidation runs. The algos will dump or pump the market and take out all these positions, usually the exchanges. This is why I say, I don't care what exchanges you're trading on, I would highly suggest monitoring your trades, trading low time frame volatility, taking your profits, and definitely not putting stop losses in the system, because it makes you a target. Literally, as soon as you put a stop loss in the system, it's like raising your hand. You're sitting in the class, right? And before you know it, there's maybe 50 people in the classroom. Guys, 49 of them have their hands up. And when they see an opportunity to liquidate or take out all these stops, they will do it in a heartbeat. They do it all the time. And as I'm saying this, so this indicator right here, if you are still on here, you're asking what indicators. This is our ultimate power means. This isn't grandma's super guppy. The band that you're seeing, these are means. These are power means, different levels for the returns to mean revert to. Then we've got a reverse wave trend, a reverse Fisher, and 3 log return moving averages, not lagging simple moving averages or exponential moving averages. They are both lagging indicators. Everything's built on price. RSI, Stoke, MACD, built on price. We're not interested in using indicators built on price, because price doesn't follow price. Price follows returns. That's why our returns oscillator is so powerful with divergence. Literally, do I trade this directionally? Absolutely not. It's for divergence, period. So is my Z-scores. They're all for divergence. That's all it's for. Meanwhile, people are out there trying to directionally trade the RSI. Good luck. Hey man, if you figured out a system where you can be profitable, I guarantee you there's 2 things you're doing. You're taking that profit. You're not swing trading. You're limiting your losses. That's the only way to make money, especially to start really crushing a P&L. Guys, you're never going to crush a P&L if you're just sitting in losses, taking those losses, letting your stop losses get hit, letting yourself get liquidated. Sure, you might win a nice big trade. Add up all the losses, though. This is what I like to ask people. How many times a year are you withdrawing money out of your brokerage account or off these crypto exchanges and putting it back into your bank account? Most people are like, how do you do that? Seriously, I mean, this is the biggest problem. Deposits. People are not extracting money out. They're just adding money in and losing, having fun.
When they do extract money out, they usually suffer big losses, just like the people who, a lot of whom pulled out, last week a bunch of money when the SEC did that whole thing with Coinbase.
Yeah.
A few days ago, and there were like 700 million worth of crypto that came out of exchanges. Guess who wins in that scenario? Do you think it's the retail traders, or do you think it's the big money bags that see an opportunity to scoop up all that released crypto to get it at 25, 35, 40% off? Right? And really, what it comes down to is,
why do retail traders use lagging indicators? Because they're always looking back on their losses.
Pretty much. And so it's I highly recommend trading VEPS to people who are learning to trade and to people who have been trading and getting wrecked for a long time, because there is just absolutely no question But these are the maths that people are actually using: the variance, the z-score, the mean, the returns, the standard deviation of the means, the entropy. Those are the things that people who are running most trades are actually using to run the big bots that move most of the markets. Right? The people moving most of the markets, they're not drawing boxes on charts. They're not drawing triangles. Right? They're using math. And you don't have to be great at math to do this. You just have to know how to use tools that are built with the right math.
Yeah, she's all right.
That's all.
Fucking dog just fell down the damn stairs. She's getting old. Son of a bitch. Thought she got hurt. She's okay, I think. Always something, man. Always something.
Yeah.
My kids are getting old. So, yeah, here we go. Let's see. You know what? It opened up above the top side of the 68.3 Laplace. That's where it opened up. Here's the top of the daily range. Where did I say it was going to be? 433. It's at 433.18. Pretty damn close. Pretty damn close. So we got the expected move. Now I'm looking at Tasty Trades brokerage, right? Got the expected move at the open down about 433.5 to the downside, 437.5 to the top side. So you got about a 4-point range on the expected move. Ah, boy. So you gap up pre-market above the 68.3 Laplace distribution range. That's these white crosses right here, right? So what does this mean? There's a 68.3% chance SPY's data set closes in this range today. Here's the first standard deviation normal distribution to the top side. Here's it to the downside. They're both the same probability levels. You're just dealing with two different distribution models. This as well, there's a 68.3% chance when it comes to normal distribution that it closes in between like 431 and 437. People are like, oh, well, hey, genius, that's a pretty big range. You don't understand, though. If you get wicks outside these ranges, those are the probabilities it pulls back inside. And they just get bigger. Here's a 2SD. Here's a 95.4 Laplace, right? And the second standard deviation also is 95.4% probability level. So what is this data set going to do? Very interesting here. What do we got? 430. Where's the top side of this? Daily is at about 433. Yeah, they're not dumb either, man. These market makers, there's a lot of premium in these strikes. It's going to cost you some money if you want to buy these puts. Where you got 439s at 14 cents. 439s. I mean, that's pretty damn high. I'm going to be honest. Let me pull this down a little bit. What's the 1SD up here at? Because yesterday, right? First standard deviation move. Closed right at it. Here's the 1SD today. Yep, 437. Let me see here. Now we got, I'm looking, is that the bottom of the daily? Let me pull this up a little bit. It sure is. You got the bottom of the daily range right now at about, tell you what, man, this is dangerous. It's at 430. Give me a second. 1, 2, 3. I think that's it down here. Hold on. Let's drag this up a little bit. Yep, there it is. Right there. I'll tell you what, it's at the 95.4 Laplace too. And from what I read in the chat earlier, you said you had to stop at 426 something. I mean, that is below the daily range. Probably safe. I'd be real careful though, man. That's the whole thing. Stop losses, I do not like them. Definitely don't teach people to use them, right? And I used to totally mentor people in trading. Don't really do it anymore. Still have one person I talk to. But yeah, it's just, oh my God. It's hard. It's really hard to get people to see what we're seeing, right? That's the whole thing with trading the VEPS. We can show you what this indicator is. We can tell you what it does, but everybody's going to be seeing the charts differently, right? You got to create your own strat, your own edge. You got to add this strategy into your edge. An edge just isn't a group of indicators. That's the smallest part, to be honest. Right? There's a lot more that goes into edge. One of the biggest things is risk management. And that's knowing that if you get into a low time frame volatile move, the correlation breaks. The move goes against you. Guys, if I'm down scalping the 3-minute or the 1-minute chart, if either one of if a 1 minute or a 3-minute candle, whatever time frame I'm trading, closes below my entry, I get out of the trade. Do you understand how good risk management that is? It doesn't matter if you just get a wick and it dips down and then continues on. You can always get back in the trade. But what if it doesn't? What if all of a sudden you're trading Bitcoin and now you're $800, $1,000 underwater because you were like, no, my entry was great. I'm emotionally attached to this trade. I'm going to sit in this damn thing. Real dangerous, man. Real dangerous. That's why. That's how you limit your losses. That's how you build a good P&L. Because I'm always going to take my profit, and I'm using distribution levels and volatility ranges to do that. Usually front running them. If I see a distribution level like up here that I'm targeting, I'm going to front run it at a volatility range probably, or vice versa. Either way, I'm running up to a volatility range. I'm going to front run it at a distribution level. It just depends every day how this chart sets up. We're not drawing on our charts. We're not pattern traders. Traditional support and resistance is total BS used to manipulate traders. Data sets, guys, that's not real support and resistance when you're talking about random markets. And how can I say the markets are random most of the time? Because we have an entropy indicator. This is the best way to know when the market is in trend, right? People are like, entropy? You're using entropy? Yeah, we use entropy. What does entropy do? It's exactly what we're looking for. There's some other ways that some other people have found to find trend, but a lot more goes into it. It's a lot harder. I had to use 2 different indicators. All you needed the whole time was an entropy indicator. Our coder wolves did that.
Beautiful.
Yeah, man.
It's beautiful. It's like depending on where you are in the trade, but it tells you when entropy is near zero, you start to look for like a range breaking trade, right? Like either to the upside or to the downside. Then if it flashes green or red, then go, okay, well then it's initially short. Catch it. If it turns against you, it goes back up to zero, then you know that's a mean. Wait for it to break this range, and that's your trend. It's a beautiful, beautiful indicator. It's just foretelling for anyone that's new. Entropy would just literally be telling you that chaos and disorder is now increasing.
Yeah.
Or chaos and disorder is now contracting. What does that mean? That means if you have a comet or whatever it is flying towards a planet, it's going to tell you the moment of impact. And it's going to pretty much monitor every grain of sand that is now, how do I put this? It's going to be monitoring every grain of sand that explodes off of that little planet that's been hit by this meteor. And the wider that radiance is, once the dust gets out of its atmosphere, that could be like a standard deviation move, or now it could be trending in space, like now the momentum goes forever until it bumps another object, that grain of sand. So entropy is a very, very interesting thing. It's used in rocket science. It's used to measure stuff in space. Okay, it's been around for many years. But it's older than me times 2. So yeah, it's very interesting. You can look at Shannon Entropy biography, and I'm sure there'll be a 10-minute video explaining all about his life and how he came to this equation.
And anyway, it's like
history lesson done.
Yeah, and entropy, man. It's like who's using entropy? I don't know. Some of the most brilliant minds on the planet to pretty much do everything. So there you go. Yeah. So yeah, Hawaiian. I just read your chat, man. That's great. I mean, you're literally the first person I've ever said I use correlation coefficients to trade pairs against each other. We talk about it all the time. You'll fit in perfect. You should come join the Discord. But here's my correlation chart.
Started. Yeah.
And I saw you say, you never saw correlation with indicators. Here's why. See, we built into the code. You can correlate different indicators, but you can also change the source to different indicators. Right here, let me let's pull up. Actually, I didn't want to pull that up.
That super fancy one that's got like 7.
Wait a minute here.
It's beautiful. I really
pull up Volatility Starter Pack. Now here's a free chart we give out. Just the Volatility Starter Pack. So here's our basic volatility indicator, alpha volatility percentile. Let's let this populate. Trading view, yeah, I know. So is what you do, our Pearson correlation under source, right? You can have a default current symbol. We're not doing that though. We want to use the correlation tool to correlate, right, the volatility indicator to price action. Not two different data sets. That's how you correlate. That's how we've set this up to be able to correlate indicators. And when you correlate volatility to price action, volatility expansion and contraction gives direction. So I just wanted to say that real quick. Good stuff. Glad to see people using correlation. Not a lot of people do. So boom, they're right there. I mean, you would definitely be a good addition. And we're not even, like I said at the beginning of the stream, we're not trying to sell anybody anything. If you're in the Discord, we're talking. After a while, you get the free trial. You see something you like, by all means. And for what we charge, what other people are charging for indicators, guys, it's cheaper than buying a Starbucks every day, a month. It's ridiculous, right? So it's not even $100 a month. And we have a massive suite of indicators for you to pick and choose from and create your own strategy. Because everybody's charts, especially the founders here, we all have different charts. Everybody uses different indicators. I have my way. Yasha has his way. Donnie has his way. Matt has his way. And Matt has his way. Is he in here? No. He's laughing if he's listening. But yeah, it's good stuff. Now, back over here. SPY apparently is making a run away from this daily range. Wow. We got the top side of this daily at 433. This thing is defying all logic. But yeah, if you were in an early morning trade, you'd literally just hit the 4-hour first standard deviation. It's right there. Look, we can put this on a 1 minute just so you can see these ranges. There it is, the skinny blue line. That's the 1 SD on the 4-hour. Here's the top side of the daily range. The center of the daily range is at the first resistance level on the weekly volatility range. That's this red dotted line. Center of the daily range, bottom side of the 68.3 Laplace, which is the white cross line. This is real support. When you cross this weekly level right here, that resistance turns into support for volatility range. So yeah, good stuff. Here's the new weekly range, pretty tight. I mean, is SPY literally going to run this early in the day, first standard deviation? Almost took all day yesterday. It's already halfway. I mean, it's already on its way there. You literally gap up above the 68.3 Laplace. Wow, man. What was that? Pull this down a little bit. Get your butt down here. Man, this thing's on a crash mission, bro. Gotta remember, though. We got this daily range is pretty tight too. It's only about 60 cents, 59 cents to be exact. Which that is pretty tight. And you already got a tight weekly. There it is. Boom, boom. This thing is just off the charts, man. Be careful here, guys, though. I'm telling you, man. Just be careful.
The thing. When you see a big candle and you see a big outlier, you see it hits the standard deviation targets. Best thing to do is honestly take the profits.
Here's the outlier right here.
Not cheese making advice. Like when you see that big fat outliers like that, when you tap out, look at that trending move. That's a big fat trending move.
Yeah, look at this.
At some point, it's going to turn around. And is that trending move going to bring it back down or continue going up? Doesn't really matter if you take your profits and then you can reposition for the next trade with more capital in your base.
Yeah,
As opposed to sitting in it, hoping it's going to run, and then watching it just plummet in a quick move.
Yesterday, the trend started late in the day on the 15-minute. I mean, you can see it. Now it's strong, but also started an outlier. Right at 2:30. Started the first outlier to the top side going into the end of the close. Then what's variance do? Turns down, negatively correlated, starts contracting. When you have volatility contracting, negatively correlated, the data set will continue to walk up. Like trend, look at these nice full candles. Variance turns down, negatively correlated, you get some choppy. But if it's negatively correlated, you can be pretty sure this is going to continue to walk up. And now look, right at the market open, boom, another 15-minute outlier. Is there any divergence building? There is, but you probably, the way this thing's moving now, you get a top here, it's going to be some early bear div, right, on the slow time frame. Let's go. Let's jump down on the 3 minutes. See if this thing's setting up. Yeah, it's setting up hidden bull. Setting up hidden bull, indeed. You can see the higher highs on the returns oscillator, right? And if you want to see the difference we talk about, right, you can pull up an RSI, throw it on a 7 length, and look at your RSI compared to my returns oscillator. You're not going to get the same read. Why? Because this is the returns. Listen, when you have a data set that's chasing the returns, price action follows returns. This is the only divergence you need to be looking at. And what is that divergence? It's the imbalance in the buy and sell pressure. That's how you see that, right? And right now you're getting a lower low on the returns oscillator, right, from this pop right before the close yesterday. We'll see. If this returns oscillator turns up with hidden bull, you'll get a move when it crosses a zero mean, unless you see some nice positive correlation when it turns up. You're not getting the hidden setup on the low length Laplace Z-score though, which is fine. It's definitely showing on the returns oscillator. We talk about entropy all the time. Look at the entropy turning up, and it's crossing back inside the second standard deviation. Usually, you're going to get this close. You're going to see the line on the bottom here. This is our prediction model. Predictor flipped, go long, right? You can see how sporadic it is right here. These are the best times when you start to drop in the trend. And the correlation of the entropy, that's another thing, we correlate. How in the hell how can entropy give you direction? When it's correlated to price action, that's how. So boom, right? Great move to the top side. This is on a 3 minute. And we're all about scalping low time frame volatility. Right now, obviously, this was going into the close yesterday, so you're not going to like jump in a trade at the end of the day. But now you got entropy turning up. Is it going to cross back up into 2SD? Usually when it does, you're going to see a predictor flip. Look right over here. Trend. As soon as it pulls back up inside the 2SD band, you flip, you get a little pullback. Right? You flip, you get a little pullback. On what? Bear div, man. There it is right there. Lower high on the returns oscillator. I could pull up an RSI right now and show you the return that the RSI on this low time frame wasn't showing any bear div. The RSI gets people in trouble all the time. It is one of the biggest lagging indicators built on poor math that you could possibly ever use. The guy was literally an engineer, shitty at his job. He's like, I'm going to start making indicators. So he takes that shit math and starts making indicators. It's like, you just want to beat your head on the table. It's like, please don't stop using that indicator. Got Django in the chat. What happened? Aptos swish you away. Where you been, bud? Right, everything's going to follow Bitcoin. Now here it comes. Let's see here. Let's see what happens. What's the top side of this at? Let's see if they suck some of the premium out of these 433s. Yeah. I don't know, man. What we got, dirty boy? Some action. Where did the 432s at? What's the bottom side of the 68.3 right here, man? 432.7. Bottom side of the daily right at 432. Interesting. So now we're pulling back down. You've got, see this red dotted line? That's the second resistance level in the weekly volatility range. Guys, here's the top side of the weekly. Literally, by the close on Friday, there's such a low probability of SPY closing above 438. That's why when I read that in the chat, I'm like, this is going to be a long swing trade for you if you're waiting for that number, that target up at 446. But in the meantime, right on this trade, you could have bought a call, got out of that position, readjusted, and bought and maybe got into a put. There's so many trades on low time frames. And you don't have a lot of capital at risk. I mean, there's a lot of things that goes into this, man. A lot of things. But like I said, man, if you have found a way to make money in these markets, then just if you're watching the live stream, just have a good time. That's great. How is Aptos? Well, everything's following, crypto's under attack, Django. So it is what it is, man. All right. We're used to this by now. I mean, got to have been in crypto since early 2016. Knew about Bitcoin in 2012 when my goofy cousin, I know he's not listening because we had a falling out a long time ago, was buying stuff on Silk Road. using this crazy thing called Bitcoin. I'm like, what the hell is Bitcoin? This guy literally didn't have a exact number, but did a rough estimate over about a 2-year period before Silk Road went down in 14, I think. He freaking went through about 20 to 30,000 Bitcoins buying stuff on Silk Road to take on Fish Tour with him, right? Then he ends up on the East Coast getting busted on Fish Tour, spends time in like a New Jersey jail for like a week or something. If he would have just sat on those 20 to 30,000 Bitcoins instead of doing dumb shit, he'd be a freaking billionaire right now. It's ridiculous, man. It's ridiculous. This is like a story. People that have lost hard drives, thrown old computers away with thousands of Bitcoins on them and stuff. There's still a guy out there in a freaking trash dump looking for his old computer every day. Yeah, man. It's pretty crazy.
My brother had something like 100 million Doge saved to a hard drive, and then it had to be reformatted when it was next plugged in.
100 million
We didn't know
Doge.
that hard drive had the shit on it, so you just click refresh.
And what was Doge's high?
I don't know, bro. For us, that would have been like 100 billion rand.
Buddy, wait a minute here. Because if I remember correctly, right, Doge's all-time high was like, give me a sec. How many did he have? 100 million?
Something stupid, yeah. Like he was mining them.
Holy shit.
Back.
Yeah. Yeah, let's see here. Let me go on a weekly on Doge.
There's like 50 cents or something.
Yeah, that's what I'm thinking. It was something like that. Let me pull this
Around
back.
the time of the Saturday Night Live thing.
There it is right there. Dude, 75 cents.
There you go. Yeah.
Well, that's about, so if he had 100 million, that's
about
$75 million.
Yeah.
What the hell? No wonder you guys are royalty. Now I know why you guys are royalty. There you go. Sitting on 75 mil of Doge.
well, now you know that it can't go to zero. Just figure out what that number is, put your buy order above it, right?
Pretty much. Funny, man. Oh my, that's crazy. A lot of money.
Throwing darts at targets. How's your monkeys go?
How are the monkeys?
Throwing darts for you well?
No, they actually, my boy is finally breeding, and I'm getting some stock. So I've got 2 baby goats that are now here off of him. So if they were usually $20 a goat, these guys can sell for like 80 little babies to 120. But I don't want to sell them.
You gotta train your monkeys to throw darts better, bro.
No. And then I've got about another. I'm hoping for twins to pump the little baby pack up to like 6 goats.
You should
at least another 2
teach the monkeys to ride the goats and open up a petting park. That'd be great.
Yeah, then you could feed the goats for free, huh?
Yeah, you can like televise your squirrel wars.
Dude, it's pretty cool.
Oh, I got the same shit going on. It's amazing out here in the bush. There's all kinds of whack shit going on.
It's no better place to be. If you can, there's no better place to be.
Yeah, man, and you can charge people XRP to pet the goats or feed the goats or whatever.
Yeah, you can make little XRP chips and people can feed them XRP chips.
Yeah.
Funny. Yeah, it is what it is. Yeah, there we go. There's a little 15-minute bear div. It's just crossing the zero mean right now. We're seeing this down move. It's on Z-score too. And look, on the 30 length Laplace Z-score, which this is why I love the pseudo Laplace Z-score. Man, very rarely do you get outside these confidence intervals anymore. When it was optimized for normal distribution, it was happening a lot. Now that it's optimized for the pseudo Laplace, I'm telling you, man, good stuff. Doesn't get out of there very long on outliers. You can see this outlier, look, hit dead on 99% confidence interval. This one shot outside. That's a powerful move. Which even better. Usually this is going to want to run to the bottom side confidence intervals. Remember, this is the Z-score of the Laplace distribution, right? This isn't built on price action. So the data set doesn't immediately have to follow, right? Just like the returns oscillator. And usually when you get these divergence plays, you don't get a big heavy move until you drop to the other side of the zero mean. Where's Matt? Matt in here? Matt doesn't use the zero mean. Boy, I was getting on him one night. It was funny as shit. I wish everybody would have listened to it. It's like, what do you mean you don't use the zero mean? No, he's got his own strat. It works well for him. That's the thing. One thing that you will see in common when you come into the Discord, everybody's trading VEPS. They might be trading them in different ways, which is totally fine, but it's not like a regular trading Discord or community where everybody, this way is better than that way. Well, I use this strat and I use this. Everybody's using different shit. Nobody ever comes together on anything. It's usually just one big argument. We're not into that. That's why you come into the Discord, you focus on this stuff, you're going to learn a lot quicker because everybody's using the same stuff, right? Everybody's giving little ideas. Hey, this is what I do with this indicator. This is what I do with that indicator. Here's what I'm seeing in the charts. It's pretty fun. We've got some good people in here too. That's the thing. We really don't attract degens. People that come here, they really want to become professional traders. That's who we're targeting, right? Or people that already think they are a professional trader but don't have any type of good risk management in place at all. They're still putting stop losses in the system. That is one of the biggest no-nos ever. One of the biggest no-nos ever is to raise that hand up and say, here I am, come get me. That's all you're doing. I don't care if it's in traditional exchanges. They all have trading desks trading against, guarantee it. Guarantee you all these big firms have people trading against their customers. It's just a known fact. Because what is the little three-letter agency that's attacking cryptocurrency, right? They're supposed to be there to protect us retail traders. They're not there to protect retail traders. They're there to protect the elite, right? They're there to protect corporations and big banks and things of that nature. They're not there for us at all. Trust me. They're not. That is a massive scam. But people fall into it every day. Oh, these guys have our best interests. No, they don't. No, they don't. They're helping the elite extract liquidity from you. Why do you think you have this day trade rule? They don't want the little small guy coming into the zero DTs and making good money, right? So they limit you. You get 5 a week, 5-day trades a week, or they're going to come and they're going to get you. You're a day trader. They're going to suspend your account, all kinds of shit. Not good. There's a lot of rules set in place that are for the elite. That's all it's for. That's all. Any 3-letter organization. Has everybody figured that out yet? And I don't give a shit. I've been on the list since I got out of the military. I've been on every list you could possibly imagine, so I really don't care. I got nothing to hide anyway. So it's like, they're all there to protect the elite. I don't care. You name the 3-letter organization. I don't like to say the 3-letter organizations. It leaves a shit taste in my mouth. But they are all there to protect the elite. Period. The end. I don't care which one it is. Name off a 3-letter organization, then sit down and really think about it. Yeah, that's all they're there for, man. They're all to attack the free thinkers, right? To attack the people that won't get in line with the status quo, that want to give a different angle on things, right? The matrix attacks you. That's what this is all about. They're all part of the matrix. When you get out of line, the matrix attacks you. It's a known fact. Okay, let's see here. Thing is, are you Neo? Are you going to be Neo? That's what I try to be every day. Neo. You want to make?
Yeah, another shit coin.
Yeah, one of the Chinese scam coins for sure, 100%. Loop ring, Neo, it goes on and on. Fucking what's the other one? VeChain. VeChain's a hot one. Is it a good supply chain? Probably, but dude, I'm telling you, man.
It's it's used for supply chain management. To track the movement of goods.
Yeah, and it's made it. Man, that thing popped on before. That thing was popping on right at the beginning of like the 2017 bull run, which everybody's like, oh, dude, that bull run started in 2015 when Bitcoin was at $240, right? Started running. I think I started buying in at $400 in like I think it was September of 2015. It was around $400. But yeah, man, good stuff. Good stuff. Crypto is wild. Crypto is wild. Decentralization is the ethos. What happened, people?
Oh, I'm loving this this drop from the top on SPY right now.
Oh yeah,
Absolutely brilliant. Like,
it's like
take profits.
Yeah,
Keep saying it.
4 hour first standard deviation. Look at this. Look at the down candle though. Shot right to that second support level or resistance level on the weekly volatility range. Is it going to break back down inside? This is tough right here. You got to break down inside. You got the second support or resistance level that's flipped support now. You got the top side of the 68.3 Laplace distribution. You got the first resistance level on the daily volatility range, the 4 hour 68.3. I mean, look at this pile right here. That's why the first wick down bounced right off of that resistance level that's flipped support. Bears are going to have to come in strong here, bust this back down. Now, does this daily range need tested? Never even gave it a chance. Not only did it not gap up through it, right? It literally, the data set yesterday closed above it. Shot right to the 1SD. Got a wick above it, actually, right? But pulled in. That 15-minute candle closed inside that 4 hour first standard deviation. Now it's pulling back, trying to break down inside these levels. If you see this data set get back up inside this 4 hour 68.3, that'll probably be when you're going to see this come down, test the daily range. Now, is it going to bounce from there? Good. Sure could. Let's see what we got working here. Move your butt. This could be a little slow play though, man. You can see yesterday, right? Gapped up above. But look, you gapped up through the daily. Now here's the new weekly. You know, I was saying, hey, this weekly range needs to be tested. But in the same breath, I'm like, but look at the close on Friday. Look at the bears. They ran a wick right to the top of the new weekly range. You think these big algos know where these levels are? 100% they do. They know where all the distribution levels are. They know where all the volatility ranges are. You can see it in the data sets because these algos are running these data sets around. You think it's retail traders? Absolutely not. Do you think it's mere little hedge funds? And absolutely not. High frequency trading firms, the big boys are running these data sets around. I don't care what markets. That's where all the liquidity is. We're just hoping to create a strategy to be able to recognize what these big algos are doing on the low time frames. We're jumping on the coattails. If the volatility, if the correlation breaks, look, because the algos are good. That's why you got to be sneaky. When you are I'm just Bilbo, right? I'm trying to figure out what's going on with these algos, dude. Sometimes the correlation is going to break and you're going to get some moves that go against you. Get out. Just get out of the trade. We talk about this all the time. The thrill that you are going to get, the endorphin rush you're going to get from closing out of a bad position is going to be way better ever than taking profit on a trade. It just is. And if you think about it, it makes sense. You know that you made it, right? You've finally got some risk management in place. It was hard forever because you were emotionally attached to trades. Now you're not. Now you're just going to be like, I could give a shit less. Did I get a good entry? Yeah. Maybe I didn't take profit quick enough. Correlation broke and that thing just dumped right back down. Get out of the trade. Don't give it a chance to take all your money. It's simple. You lose a few bucks. Don't have a stop loss in the system. Because once again, you're like, here I am, come get me. 9 out of 10 times, they're going to find that stop loss, right? These algos are the exchanges that are running algorithms to see where all these stop losses are, where all these liquidation points are, especially in cryptocurrency. Crazy. And people just out there randomly trading the futures. You know, if I'm going to randomly trade futures, like I said, it's going to be commodities or something. I'm not going to jump in and start trading crypto futures. Very, 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 very dangerous. Why? Look, futures are there to help hedge options positions. That's when you see options expirations getting closer to date. You'll see mad fluctuations in the futures because you got options traders that are trying to adjust their positions using futures. It's not. I've heard people say, "Yo, people use options to hedge futures positions." Sit down and really think about that. That makes 0 sense. 0 sense. It's totally the other way around. Go talk to any options firm. They're going to tell you the same thing. Futures are used to hedge options positions. That's why places like Tasty Trade, right? They have futures, so you can use them to hedge your options positions. It's Tasty's big on options. Let's see here. What do we got? $2. Just want to get into work, clothing, Just had to read something real quick. All right, good stuff. So where are we here? Now let's take a peek for Django. Let's look at Aptos, man. I'll look at Aptos for you, buddy.
Yeah, 4 hours having an intersect right now on it.
On Aptos?
Yep.
He said, "Yeah, boy." First, let's go to a daily. Remember, I would highly suggest not even going to a daily. All right, forgot you can't even get a variance print. But here's the 4 hour. Setting up some hit. No, it's not. Yeah, it is. Sorry. So you're setting up some hidden bull, but God, look at the rejection on the zero mean right here. All right, look at the rejection. Now, hidden bear. No, it's not hidden bear. Higher high. Yeah, this is clean chart. Clean chart indeed. Now there's some bear. Let me see. Yeah, you got some bear div on the Z score though. Just a little higher high right here. That's the problem with Aptos, Django. I mean, dude, we just can't get any higher time frame stuff. Look at variance. Variance is low. Look at the last outlier to the downside, right? That was that power move. That was when crypto was under attack, right? And got the crypto just dumped. What Aptos go down to? 5.4. Wow. Shocking. Yeah. And that was the last trend on the 4 hour, was that dump. This whole move right here, this is all a random walk. You can see the predictor flipped 1, 2, 3, 4, 5, 6, 7, 8 times since it's been going back into a random walk. Meanwhile, people are trying to swing trade this shit. Seriously? Come on, man. Come on. I mean, let's go onto the 15-minute. There we go. You look at all these, all these moves. All very scalpable. And this is a 15-minute. You drop that down on the 3-minute or 1 minute. Whee! Great. A lot of people are like, man, that's a lot of noise. As a low time frame volatility trader, noise is your friend. Right? That's why people coming over that have been using traditional TA indicators, like we mentioned previously, noise is your enemy. Right? People are trying to keep it simple. Yeah, people try to keep it simple, which I don't blame you. When you're using lagging indicators, what's going to be easier? Trying to use just a couple or just 10 that are all just misleading you? Everybody's trying to find this little strat to add into their edge. You're not going to find it using traditional TA. And if you have, I guarantee you, you're probably trading low time frames. You're taking your profit. You're limiting your losses. Because if you're trying to use traditional TA to swing trade any asset out there, good luck, man. Show me your P&L, because there's people all the time that you're used to come in the chat barking. Rah, 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 rah. It's like, well, show me your P&L, man, if you got such a good strat. And it just goes, freaking comms go silent. Of course they do, man. Because most people all the time, or it's like, where's your live stream? I'll come join. I'll listen to what you have to say. Where's your live stream at? All you doubters and haters. And that's what I was like. Show me your P&L. Where's your live stream at? It's crazy, man. It's crazy, crazy, crazy. Now, I don't do that anymore, but I'm the one asking. I used to show my P&L all the time, and people remember. It's, guys, over 90%. Over 90%. I got up on, allegedly, when there was a time back in the dark ages when people were trading on FTX. Remember those days? Allegedly, I broke into the top 20 on the P&L. You know who was all in the top 20 on the FTX leaderboard and P&L? Dude, it was all hedge funds and stuff. No single traders. I was the only freaking one. Only one. I got that screenshot somewhere. Maybe I'll post it again sometime. Because obviously that shit show's done with. Just madness, man.
Coffee. You gotta mint that.
Put it on. Forever inscribe it onto the BTC blockchain.
Straight up.
But
if
dude,
you were Kenyan, you would set a world record.
Yeah.
You pay 4 million shillings today.
And there's only one way to do something like that. You know how, as just a single, just me, just trading, scalping low time frame volatility, cutting my losses and taking profits. That's how you build a badass P&L, man. You don't do it by swing trading. I'm telling you, your P&L is going to look like shit if you're swing trading, because you're going to be getting knocked out of positions left and right. But everybody's just waiting for that one big move so they can get on Twitter or get in their trading Discord and go, guys, look, I'm 2,000% in. Yeah, because you're using fucking 50x leverage. You're lucky you're not liquidated yet. It's just crazy, man. I mean, there was times where I showed big moves. Guys, I've never used more than like 3x leverage. Even 5x is dumb. 10x is stupid. You get above 10x, you're just looking to get liquidated. It's crazy. And that's what happens. People start moves. Maybe they're only 5x. And then a data set will go sideways for a little bit. They add on. Or, oh, hey, we're pulling back to this data set support and resistance. Time to add on again. Before you know it, you're 50, 75x leverage. Your liquidation point on Bitcoin is about $200 below the data set. 1 minute candle. Whoop, whoop, liquidates you. It's crazy. People trade like that, man. There is a better way. There is a better way. And that's all we're doing here. Like, we're not going, hey, man, it's going to cost you $50 a month to come on our Discord and we're going to help you with your edge. No, man, the Discord's free. We have a free volatility chart. We have a free trial for the indicators you're seeing here. We're literally the first people to say, look, this might not be for you. Please understand we're not trying to extract your money. Don't come into the Discord first day. Hey, guys, I want to buy your indicators. Because the first thing we're going to do, we're going to be like a relationship, right? Psychologist and be like, okay, now why are you wanting to trade volatility? Do you understand the distribution? Blah, blah, blah. Why don't you learn these things first before you just jump head first in? See if you like the community. See if you like what you're seeing on the charts before you start spending money. Like I said, it's like in between 90 and $100 a month for I think the big pack we give out's about 14 indicators. But guys, we literally have about 40 indicators, right? And if you ever see us use something that you haven't been like granted access for, if it's not something we're beta testing, we'd be more than happy to give you access to it. We just don't want to overwhelm new people. And hey, here's 40 indicators. Good luck. That's not what we do.
Yeah, the free trial is around around 14 or so indicators. Yeah. The actual indicators you get access to when you subscribe is way more than that.
Yeah, bunch. So it's good stuff. Good stuff indeed. Meanwhile, here we are. But yeah, Django, Aptos, man. I mean, right now, Aptos having an outlier to the downside. All right, let me see this 4 hour. We're right back down to the 9 log MA. But depending on what Bitcoin does, still hasn't got up to the wave trend. This is on a 4 hour, talking almost $7 again. Almost $7. And don't even get a good read on the daily. Right? Don't even get a good read on the daily. So, what's a volatility doing here? I mean, look how long this 2400 volatility read's been up here high. What's that tell you? Look at the 981 and the 525. They're probably going to come back up and meet up. And right now, you got the 981 expanding positively correlated. You got the 2400 contracting positively correlated. You got the 525 expanding negative. What are you seeing? You're seeing you got a nice bear wick on top. You got 2 saying down, 1 saying up. They were all down. You'd be at the bottom of the power mean band by now. If that 981 was negatively correlated, you would be down here probably under $6 already. All right. That's good. Let me see. Any cryptos just getting their freak on, doing the knuckle dragger dance? Let me see here. Where are you? No. Nope. What about traditional? Anybody running? Who's running? Oil. You can just go sit back down, you fucking scammer. Let me see here.
65%.
If you're a true degen, jump in natural gas. Have fun.
PLSX.
What is it?
Yo, can we check out Coinbase? Given all the nonsense. It's Tuesday. He's a coin.
Yeah, it's up. Yeah, I will. Here, let me run through the rest. I'm just seeing if there's any big outliers. Yeah, it looked like it was up a couple percent.
All facts.
Carnival Cruise Lines had a good run yesterday. It's up almost 3% again today. What we got here?
The
Treasuries.
The Hex Duke.
Yeah, corn's up, wheat's up, beans up, rice getting wrecked. How many tons of rice a day again is being devoured? What was that crazy number?
21 million.
21 million tons.
1 million tons for every Bitcoin.
Jeez.
For every
1 million tons for every potential Bitcoin to ever be minted. That's daily consumption rates.
Oh, goodness. Goodness. Now, this is the woke zone down here. See, I got Target and Budweiser right together here, watching that shit show unfold. God, this country's insane. What the hell happened? All the values that were held so dear as little as 10 years ago, right? Everybody's like, yeah, or now it's like taboo to even talk about. Like, hey, a woman's a woman, a man's a man. No, I mean, dude, we literally live. You talk about the Matrix Twilight Zone, dude. We are there. We are definitely here. It's just crazy. God, why? Why did I incarnate at this time? It's pretty nuts.
Yo, but what if we're allowed, like, let's say all these laws go through, okay, and you can identify as whatever, these things. Then you can push a law to be identified as a Nakamoto.
Dude,
Right?
I identify as a Apache attack helicopter. That's what I identify at. It's hard on the blood pressure, but that's what I identify as. When somebody's like, you need to respect my pronouns, I'll be like, you need to respect mine. And then I get my big rotor blade turning. Then I turn on the gun turret. There you go. How's that for a pronoun? Oh, God.
Yeah, like how I look at it is instead of, like, let's say hopefully one day I can stumble into wealth and shit. But like what I would like to do is go and buy a fighter jet, right? Or fucking buy an Apache helicopter. Like,
oh yeah.
Not go and get like 30 Rolls Royces like an Arab prince or something, right?
Yeah.
It's like get the things that like peak humans have made.
Yeah.
Right. So like we have some crazy tools. Like this shit is mind blowing.
Yeah.
Now you go and you get the best of what the other humans are making. That kind of thing. So like those two things really intrigue me, but that's just a stupid thought. I want to bring you one.
For example, Colombian coffee beans.
Drinking some right now. They're good. Make a hybrid. They need to cross the coffee bean plant with the with the cocaine plant. Make some super strong coffee.
Yeah.
Obviously, I'm kidding.
Street side delicacy.
Yeah.
No one really knows.
What's that shit? That like the guys will chew on? What's the one leaf over like in Africa all the guys chew on?
Gut.
Yeah.
Gut.
It's crazy, man.
Yeah, there's a few, yeah.
Whatever it is.
Every place has a different name. Yeah, there are leaves you can chew on in some areas if they're there.
Yeah, it's often called gat or kat, depending on what country. It's actually a national problem in Yemen, and it's culturally done, but people consume so much of it that it's problematic.
Right.
And it's kind of
so a lot of people. So over here, I'm gonna say, let's just say, in Central Africa, not given the country, people just smoke bushweed. Like they grow the weed and like that's their energy for the whole day because it's pretty hot. So you have to deal with stuff So yeah, there's that, and then there's something called balan, which is like wild or the offcuts of tobacco. And then, yeah, you can mix it up with a whole bunch of things that you find under trees and stuff like this to chew, and sugars, and yeah. It's pretty fruitful out, yeah, if you know what to look for.
What's the ticker symbol?
For which wild fruit tree?
Yeah, bushweed.
The wild plums.
Bushweed.
A shopping bag would be a salt.
Can you chart it on TradingView? It's all that matters.
Hopefully one day. I'll say that.
Man, ADA's at what? 0.276 right now. Wow. Good old ADA.
Good old ADA. Getting sued.
Yeah.
How the hell do you sue? How do you sue a blockchain? How do you sue a decentralized blockchain? Who are they suing?
Yeah. Well, I've often said, like, maybe half jokingly, should you invest in a project whose name ends with no?
Interesting.
You can.
Ardon, no.
Oh, jeez.
I like it though. I do like it.
Yeah.
I have some. I will always have some, probably, but I'm just kidding. But short term, it's always very volatile. So
yeah,
trade with. And the guy who made it is a smart dude. I'm not listening to it.
Yeah.
It's just.
You reckon he wears triangles on his hat for a reason? Matthew Ferguson. I'm just asking. Yeah.
I mean, listen, it's a great project. It's great technology. It's got a lot of potential, but it's, people who've been holding that thing for like 6 years already, hoping it'll, reach $1 or whatever, go above, $2 or something. So it's a bit of a pipe dream, but for the time being, doesn't mean it'll never get there.
It's Ethereum on proof of stake, and it has a community that's been loyal, it's been there for a long time. The community helps build out the chain. They are supplying products. Other chains are partnering with ADA to facilitate swaps. So I'm just gonna say an AI token and ADA, so that people on ADA can access AI and people with AI can access ADA. So they're building up these little things which are more than just like money transfer. So
exactly.
Right.
It's
so like
bigger, longer utility. Look, they have benchmarks and milestones, and they've been nailing them over time, and that's a good thing. It's just very often, like there'll be periods of time, especially when Hoskinson will get in the news a lot, and he'll just go on a rant about something one day, and somebody will cover him, and the next day he'll just go after someone on Twitter or something, and someone else will cover him and get a lot of exposure. And people wonder, like, hey, why is this thing making so much noise again? Is now a time to for the hype train to go? It's like, nah, you trade that thing. If you're gonna trade it low time frame. If you want to invest it and hold it, that's a different thing. I personally like it. I think it's gonna do well. But short term, that thing to me is just like one volatile asset that's worth trading with VEPS. Up and down.
Okay, I will say this, as I have been trading it this year, and I've been using it to hedge against AGI. So as AGIX goes down, ADA would go up, and then it would just be about timing. And if I time it right, I can sell AGIX for like 50 cents, buy ADA at 28 cents, sell ADA for 30 cents, and maybe reinvest the AGIX at 25 cents, 20 cents. So like, there's all these other things that you can do, but ADA was a lot stronger over the last 6 months, just to the initial bear market, maybe because it fell faster first. There's a few things that you got to look out for, but it was resilient, right? It was resilient. I knew that it would always get the extra 5% up and then dump on the rest of the market and follow through. So it is in the wave of people shuffling the shit coins. Okay, like over 4 hours, you'll see each shit coin sort of like doesn't all peak at the same time.
Correct.
When people are pumping bags and collecting coins, so it's like a fade of 4 hours if you're lucky.
Yeah. It's one of the big that move a lot of liquidity during certain times. That's absolutely true.
Yeah. So like,
well, it's good for low time frame bets.
Yeah. So like, you will get filled. A little bit of patience. Those targets should get hit. Just, you're gonna have to maybe wait and figure out where it is in the cycle. Is it like 15 minutes after BTC takes its high, then they're putting it into ADA, then they're taking those profits and putting it into Doge, then they're taking those profits and putting it into XRP, taking those profits, putting it into Solana. Usually Solana is quite quick to run, so I think it's BTC, Solana, ADA, XRP is doing its own thing now, like ADA, and then whatever would come after. Ethereum is just going sideways really, so I think those are just holders. There's no one really trading it. Well, there is, but yeah, it's just being locked in a range. Anyway, so those are just my few observations before I start getting back into trading in the next 8 days. So I'm looking for ETH to sort of get hammered. I'm looking for, I don't know what to look for XRP. It's just got news behind it, and I don't have the proof right now. And I'm not saying I don't care, but I just need to take a break. So XRP can do what it wants. Solana will have to do its own thing. Nobody knows. It's been here before. So, yeah, it's an interesting time to be in crypto. Bitcoin is obviously the guy that leads the market. And it's all dictated by Bitcoin versus the shitcoin. So BTC versus XRP, or XRP versus BTC, or whatever pairing you're going to look at. That's what's going to tell you if you should be holding the dollar pumps for collecting more Bitcoin, or if the BTC pair gets stronger, or how do I put this? If the BTC pair starts to get stronger to the shitcoin pair, then you should rather be in BTC. Even though the dollar pair is pumping, you're going to get more shitcoins holding the BTC because it's getting stronger to the shitcoin under the USD pump. So the USD could pump 100%. The shitcoin BTC pairing could maybe be 10%, but because you're holding the BTC, when you transfer in, you get the extra 10% in coins and you collect on the dollar pump. So those are the things we'll be looking out for now as we start to get into these lower ranges that we haven't been in the last 3-4 years. People just took their profits and now they're just putting them back in. So like, I was buying it at this price already, you might as well carry on buying it here.
So you just take a dump?
Like, yeah, so those are the ideas. And that was before all the hype, that was before COVID, that was before that. So with all the free money on the market that came through, you still like it at these prices. And now that dictates a healthy market. So if it fails these levels, then just know for the next year, 2 years, it's going to be a downtrend. Not going to come back here. If it starts to hold these levels for the next 6 months, whilst everyone says the world is going to shit, well, then you know, all right, this is a decent hedge because look, it pumped in COVID, the world's going to shit, it's going to sideways against the dollar. That's fine. At any given time in 3 months, you can make 10%. You can beat any hedge fund that's trading for you, any trader that would trade for you, you can do it. So these are the observations we're going to look out for. Anyway, I'll stop waffling now.
So here, I'm looking at the SPY minis right now. Look at pre-market, 8:30 a.m. Bam. The minis ran down, tested the daily range. Okay, little wick right to the top of the daily. Tested. Just like SPY, right? Was up, hanging around, ran up to the 68.3. Right at pre-market, bam, runs it down. So still running, you know, SPY. There's the top of SPY's daily. Right down here. Boop. 433.21. So the minis have already tested their daily range. The SPY have to. I mean, I keep saying this. You know, you didn't gap up through the daily range, right? Here's the thing, though. God, it gets, the more volatility that pours into these markets, the tougher it gets. Because just like the weekly range, look at this wick, last candle before the close of the weekly comes down. Test the new weekly range. Well, look yesterday. Look at the wick. Look at the freaking wick right down to it. Now, you don't think these algos know where these new ranges are going to be at? I mean, that in all reality, that could be a test, just like it was on the weekly, right? Just like it was on the weekly. So when you get pre-market pops like this, you're looking for that bear div to pull it back. Could this be the low of the day? You just get a wick back inside to 68.3, pop it right back up. You can see where are the bulls at, and they're hanging on the top side of the distribution. You got 2 wicks on these low time frames. The bears tried to push it down back in here. Bulls are like, hey, we're here. Pushing it back up. So yeah, I'm going to let this play out today. See what happens. Let's go over here. SPY, what am I on, a 33 minute? I'm telling you guys, you're outside this power mean band. Look at the 4 hour. Let's let it populate. You're literally coming in from the beginning of yesterday morning. You're having an outlier on the 4 hour. Here was the time previously. Got outside the power mean band, come back down, test the reverse wave trend. Right? It even dips down, tests the Fisher in the 99 log MA, then bounces. The last few bounces have been off the top side, right? Returns mean reverted to the backside of the power mean band. Price action followed both times. You're just riding a power mean band. I am telling you right now, don't be shocked when you see on this 4 hour, the SPY data set come back down and test this reverse wave trend at some point. If this thing's going to run to new all-time highs, which, hey, it could. I'm not even saying it can't. You're going to get a pullback. You're going to knock people out of positions. You're getting people into bad positions right now. Just like, am I interested in longing a top? No, man. That's what these indicators are all about. Getting into bad positions. When you're outside the power mean band, if I'm looking for a move, I'm looking for a bounce off the reverse wave trend. All right, that's what I'm looking for. I'm looking for this pullback at some point. Let me see here. I mean, you're still on over a long-term time series. Let me see. Where's this div start? Back here at the top. Let me count real quick. Let's get our little measuring tool here. Let's see how many candles back the start of this div. So 22. If you ever measure, you got to add 1 too. It never counts first candle. So 23 bars. So what am I doing right now? I'm going to set this returns oscillator to a 23 length. It's a little trick not a lot of people know. If you want to see more of a long-term time series, if the div is like right now, it's showing you got all these lower highs, right? All these lower highs. So you change it from that point. Absolutely not, right? Now here's the highest point. It was on this move. So we got higher highs on all these data sets, lower highs, but look, you're on top of the zero mean. This is where you got to be careful. So what you want to do is see this turn back down on the 4 hour, and the move to the downside is going to come when you cross the zero mean. Not looking like it's going to happen yet. Now, can it still come down and test that daily range without that happening? Of course it can. Hell, what's that daily at again? Hold on here. Yeah, I think it's like 33, like 433 area. Guys, it's not even back down to the top side of the power mean band, let alone reverse wave trend. This could easily pull back. I mean, look, the top side of the daily is right about here. It's literally almost about where yesterday's last 4 hour candle closed. Easily could be tested. But at some point, this 4 hours is going to break down. Nothing's going to run forever. You're going to get pullbacks. Why? Because there's just buying and selling going on. At some point, the buyers get exhausted. I don't have my APPs on, but that's the alpha price percentile to let you know when exhaustion's setting in. I say exhaustion, not overbought, not oversold. If you're out there using the RSI and your RSI is in an overbought zone, do you know why? Because everybody's buying. Jump on the bandwagon if that's the way you're going to trade, because there's no such thing as overbought or oversold. There's such thing as the RSI snaking up in an area saying, man, a lot of people are buying. That's all it is. This is where people get wrecked. You get the RSI up over an overbought zone. People are like, oh, let's short this shit into the dirt. And then the data set continues to rip to the top side. They get liquidated because they're probably using leverage. It's crazy, man. You trade these markets long enough, you get a lot of insights. And where do a lot of the insights come from? Doing dumb shit. Getting your little PP smacked, right? When you're out of control, when you don't understand the volatility of these markets, that's exactly what's going to happen. It's like pissing on an electric fence. Everybody's going to do it at some point in their life. And if you ever have, you know.
You did it once.
You only do it once. You'll probably be afraid to pee for the rest of your life. Because it's
No
going
fence line gets peed on. No mess for fence line.
Woo! It's crazy. It is crazy. But everybody every once in a while needs a good smack on the PP to wake them up. Let's see. Just like that. Right? Yes. An old Catholic nun with a freaking a ruler. Just slap. Slap. Good stuff. Here's this resilient little SPY data set, man. But look at the 15-minute, man. You're in no man's land. Literally in no man's land. Top side up here. There. I mean, all the 15 minutes got to do to test that daily range is come back top side the power mean band. Right? So right here, you got one of the power means up here at about 433.67. But right now, the bulls are like, why? Okay, look. What is this? Hidden bull, man. Hidden bull div. Right? Lower low. Lower low. Higher low. There you're seeing the result right now. Let's drop all the way down here on the 3 minute. Let's see here. Yeah, man. And there's the bull div right there, right? Boom. You got all these lower lows on the 3 minute. You had this move pre-market. Bam. It goes up to that 4 hour first standard deviation. Whole time on this down move, you're just setting higher lows. You're above the zero mean. But look, when you're setting higher lows and you're setting lower highs on the data set, which look at the power mean band, it's capped right there. What's that setting up? Setting up hidden bear. Could be continuation for this earlier move on the 3 minute, which could bring it back 434.34 back to reverse wave trend. Or is this unreasonable data set? It's breaking every rule. Is this going to bounce outside the power mean band again? Because you didn't fully get a test. This would be different. If this 3 minute pulled back and tested this wave trend and bounced from there, hey man, wave trend test, we're back at the top side of the power mean band. Guys, what's this down here? 432.69. This is into some meat of the daily. If this 3 minute wants to reject off the top side power mean band, come down to the reverse Fisher. That's what you're looking at. 99 log MA, powerful on any time frame. Let me see here. Look at the variance on the 1 minute. Guys, we haven't even, I mean, nothing's even happening. When this variance on the 1 minute really pops with an outlier, look at the last time. All right, it was going into the end of yesterday. Look at the last 5 minutes of yesterday. Started having the outlier, just continued today. But look at the walk up, variance coming down. Variance coming down. Right here, when you had the little pullback, look at the correlation break. The variance came down positively correlated the rest of the way. Data set dropped. Then what started to move? The correlation didn't break. Variance just started expanding again. Positively correlated. Then it comes down, negatively correlated, walking up again. I mean, you'll see this with volatility, with the variance. Powerful. And on the 1 minute, and look on that move. Where did you come back down to? So is that going to happen on the 3 minute now? Could. Look, you tested reverse Fisher right here. Look at the wave trend finding support. 433. So the 99 log MA, on the 1 minute time frame, that's about the top side of the daily volatility range. Little higher. It's really up here about the monthly support level. Yeah, right around in this area. Look at this resilient sucker, man. Not having anything to do with this down move. Markets are off the chain. I mean, this isn't the only pullback we're going to get to come down and test this. Because if we're talking percentage-wise, you're close enough to the daily range on the close yesterday, especially when you get a little wick down into it right before the close. But the thing is, I mean, we did have a couple, nice 15-minute candles, 3 of them down that made a run towards it. And man, this is tricky. When there's a lot of volatility in an asset, you got to really look how close it really got to the daily range. And if you're within inside like a 1% range, I mean, it's good enough, man. It's good enough to continue just to run like a maniac off the chain. Crazy. Let's see here. Where am I? Mechanics. What is this crap? Tricky. Guys, there's so many scams out there right now. Be real careful. Whatever you're doing, just be careful. Lots of scams. And know that if you're ever in our Discord, the founders will never DM you. Right? We get people come in, right? Try to scam. Set up a fake profile with one of the founders' names and they start DMing people. Don't fall for it. It's not us. If you ever get DM'd by one of the founders, come in the general chat, tag the founder and ask him if he's DMing you. I guarantee you they're going to say no. It's always a scam. So don't do it. But what they don't realize is we're not here to extract money from our communities. So their little scams most of the time don't work. Because if you get a founder saying, hey, we'll give you a deal on the indicator package, just give me $50. And dude, no, it's a scam. So number one, we're not going to give a discount like that because their indicators are already cheap. And number one, we are not going to go out of our way to DM a new member of the Discord to say, hey, we're going to give you our indicators, blah, 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 blah. But to get our indicator package, you have to give us your seed phrase. Do your, I mean, dude, it goes on, and people fall for it. That's why scammers are out there, right? People are like, God, I don't know why these scammers are so persistent. That's because people fall for their scams. Dude, sometimes it's a lot of money. If they get 1 out of 100 people to fall for their scam, it's worth it. It's worth it. If they can drain their wallet for like 20 SOL, a few NFTs, and they immediately list them on the market, they make $500 to $1,000 immediately. Of course they're going to be scamming. Of course they're going to be scamming. And it is real in crypto, man. Real in crypto. Stop hitting links on every damn email you get, right? Run a VPN. There's so many things you can do to protect yourself. Highly advise doing it. What are we doing here? Ooh, that's sick. Oh, that's sick. All right, back over here to the regularly scheduled programming. Time is it? God damn, 10:40 already? When you got diarrhea of the mouth, the clock just goes quick, doesn't it? Goes real quick. My God, my Telegram's blowing up. Telegram is a poppin'. What else is popping? Wow. Yeah, gold. I'm telling you about gold, man. Look out. VIX. Remember, intraday, the VIX and the intraday volatility on the CBOE went up yesterday, right? Look at the intraday. Finally popped back up above 20. VIX couldn't make it up above 15. Now it's pulled back again. Crazy. Crazy, crazy. Fear. No fear in the markets right now, man. No fear in the markets. Let me see something real quick. Yeah. Oh, are they? Manager number. Not buying a broad bull. I mean, dude, this is all this news is used for manipulation. Fund managers not buying a broad bull. Remain underweight stocks with sentiment low. Yeah, the VIX is really showing that. I mean, it's just all lies, one after another. You cannot trust the news. I don't care if it's finance, politics, whatever. It's all used to manipulate you. The Matrix is manipulating you. Stop it. If we just stopped giving these people views and stuff, man, it would end immediately. But fortunately, people are in love with their televisions. I don't have one personally. I got a TV, but guess what? There's charts running on it. Not cable. I don't have cable. Gotta sometimes watch a Netflix show here and there. Yeah, most of the times I'm on the web, man. Trading, doing something fun. Touching grass, smoking grass, however you like your grass. Oh, shit. I heard, right. I heard. Oh, Bitcoin. Let's check over on Bitcoin. Let's see what crypto's doing. Yeah. Holding steady down here, man. Holding steady. Solana back down below at $15. Where's the low? Where is the low? That's where people are in fear in crypto. That's for sure. You're never going to be in fear if you trade low time frame volatility. You know why? Because you don't give a crap which way the data set's going. That's why. I'm trading low time frame volatility when I'm trading cryptocurrency, and I'm taking those profits and I'm stacking Satoshis. Period. The end. I could care less about stacking any altcoins. Solana is the only one I do have some of. But yeah, eventually that will be turned into Bitcoin as well. There's just some things going on in Solana where I need some Solana. I'm probably going to be purchasing some things. So why not have some? Yeah, Bitcoin, the king. That's all I need to know. Let me see, Bitcoin. Where the hell are you?
Oh, Trading View, where did you put your reset button now? What did you do? You moved it out of the menu. Freaking hell. You know when you right click on the Trading View charts on the web?
Yeah.
You normally reset. It's gone now.
Reset chart view? I got it.
Yeah, I don't know where mine went. Mine disappeared. I gotta have to kick my computer or something.
Exactly. Yep, it's still there. But yeah, they do make little changes.
I know it's still there, but it's disappeared on my screen for some reason. I have to kick the machine.
So here's Bitcoin, right? Look at these wicks. What are these wicks going into right here? What's this little white line? That's the 95.4 Laplace distribution range on this current 4-hour candle. All right, it's literally, what do we got? 1, 2, 3, 4, about 2.5 hours left or so in this candle. Bull's waiting right here. Look, front running the daily volatility range. Right. Look at all the wicks down into it. Does BTC bounce from here? Was that another run at the daily range as well? Yeah, it was. But you can see where they were front running. I mean, look at these candle closes. You get wicks below. You get wicks below that daily volatility range. Did a candle close below it? No. You run back up to the top side of the 68.3 Laplace distribution range. You got 3 wicks through it. Did a candle close above it? No, it did not. And look at the wick right here. What time was it? Yeah, pre-market. Pre-market for traditional assets. You run a wick right to the first standard deviation. Pull back. Almost close inside that weekly, inside the center of the weekly range. But then on that next big clear out candle, right, you got a wick all the way down to the 95.4 Laplace. Pulls back up, closes inside the weekly range. All right, and then here's the other one. Didn't close a candle above the daily 68.3 Laplace. Sent 1, 2, 3, 4 wicks through it. Boom. And now you get wicks down to the 95.4 Laplace. Let's see if we close a candle down below it. Right? Are we going to close candles below the daily range? Bitcoin closes candles, some 15-minute candles below this daily volatility range. This thing could run down to the first support level. Definitely bottom side of the 68.3. Right? 25, like 775 area, something like that. So we're just going to see how this plays out. A lot of fear in crypto. No need. Especially, I mean, guys, if you're buying cryptocurrency, you're buying Bitcoin. You're sitting on it. You don't care what the price is. Talk to Michael Saylor for a while. He'll get you square. Think he cares what the price of Bitcoin is? Is he just loading bags? No, man, he's buying at all kinds of different prices. We're right around his average entry too. Right around here somewhere. 27, or I don't know exactly what it is now. He's been buying all over the place. Good on him. Good on him. Guess what corporation's going to be just stinking filthy loaded when Bitcoin runs to $1 million? MicroStrategy is going to be the biggest damn corporation in the world. They got so many Bitcoin now. It's insane. But people are calling him crazy. You talk to him for any amount of time, you're going to realize the guy is not crazy. He's pretty smart. Pretty smart dude.
I call him crazy because he doesn't trade VEPS, but apart from that,
Hell, he don't trade anything. He's just stacking Bitcoin.
Yeah, but he can have 2 or 3 times as much if he just trades VEPS. Yeah.
Yeah, but that's gonna you take all that money. You're taking that money. He's not gonna be trading with it. You talk about making shareholders nervous. What's Saylor doing? Is he trading all our money? Yep, he is. No, he's stacking Bitcoin. But yeah, I agree. Yeah. Anybody out there that's, the VEPS are just a way to trade. You find out what the high frequency trading firms are using, and then you're just, if you're not following in their footsteps, you're missing everything. You're just missing the boat. But that's why we're here. Low time frame trading. That's why people are like, oh, did I miss it? Did I miss the boat? No, you're never going to miss the boat trading like this. That's why you don't have to be in every trade. You want to trade 3 days this week? Trade 3 days this week. I highly suggest setting up times where you're going to trade. You're not leaving your desk. You're monitoring your trades. You're trading low time frame volatility. You are your stop loss. You're the one limiting your loss. You're not raising your hand in the system. Hey guys, here's where I'm limiting my loss. At any time, just come down and get me. That is silly, man. If you're still doing that, rethink what you're doing, please. Get the risk management down. That's why swing trading is ridiculous to me. Because number one, you're not monitoring your trades. You're out dicking around doing life shit. All right. So at any time, volatility can kick in, knock you out of your position, and go right back up and start running the way you were. When you could have literally been trading low time frame volatility, never been in the swing trade to begin with, and you're trading every ebb and flow. Just like Yasa just said, how many more Bitcoin would MicroStrategy have if they just were trading the VEPS? Probably a lot. But that's, some people just want to buy for the future. Some people are just loading their bags because they know where this digital currency thing's going. You got the American government literally attacking cryptocurrency. You don't think they want cryptocurrency? Yeah, they want it. They want to track everybody. They are some, let's just call them, they're interesting individuals. I got some interesting words to label them with that I will just keep to myself. But yeah, massive, very unethical people. Go back to traditional. Bitcoin's probably going to bounce off of that 4 hour, but you never know. Meanwhile, SPY is just being very resilient here, man. Very resilient. Almost back up to the 4 hour 1SD again. Made a run for the daily first standard deviation. This is what you're looking for here. Lower time frames. Let's go back to this 3 minute. There we go. We're getting some local bear div, right? You're back below the zero mean now. Back below the zero mean. And look how long it's been since you've been down into these lower confidence intervals on the 30 length Laplace Z-score. Been a while. And you've literally been messing around. This outlier was outside the 99% confidence interval. This one was almost to it, right? You're getting these pullbacks, but when? When's this thing going to dump down? When are the returns going to move to the downside? Probably sooner than later, to be honest, man. Because there's a lot of time frames that have not tested this wave trend. Let these populate. And the higher time frame you go, the farther away you are, and the more significant the dump is going to be. When it happens, does it have to happen today? It doesn't. But I'm telling you, man, these wave trends get tested. You can see right here, just on the 6 minute, just came down, tested the 9 log MA, said continue on. But then, guys, that's what you need to understand. When you're out here, the data set's in no man's land. Returns do one thing, and they do it very well. They revert, right? The returns mean revert. That's what they do the best. That's why, that's why we have deviation bands, right? That's why we have deviation bands. Look at this move. You move up to the top side. This is the Laplace distribution bands. You hit the 95 Laplace to the dollar, and then just dump down to the 68 or to the 95.4 to the downside. That's a 6 minute clear out candle right there if I've ever seen one. Little fake out, boom, right back down. Ran the 95.4 Laplace distribution. Now at the same time, that candle, that's telling you there was a 95.4% chance the data set was going to close in that range, and it did. It does all the time. That's why we love the bands. Powerful. You need to know. So when's it going to happen? I mean, you've got, let me see here. You definitely, that's tough. From that high right there, there is no bear div, right? Pretty clean freaking chart. Beside this hidden, there was the hidden bull that popped it back up above the zero mean. But when did the move to the top side start? Look at it, right when it crosses zero mean, right when it crosses zero mean, you get the little pop. And now look at it again. It's right here. And locally, this is a lower high. You blow it up, it's going to be a lot steeper than it looks. Look at that. So when it crosses zero mean, that's when maybe we get the pullback. You know, it's 433.65 on the 6 minute is the wave trend. Some point on these lower time frames, this thing's gonna have a pullback probably, unless it just rides the power mean band. Seen it do it before. It definitely can. Somebody put crack in my coffee today. Got diarrhea of the El Moutho. Let me see here. Z-score on the higher length is definitely telling. Heading back into a random walk. Another time, look, you cross back up into the 2 SD band. Predictor flip to the downside right there. But then it flipped immediately right back up. Little news flash. You find the right time frame, I imagine 15 minute and below. Have fun with the predictor. Have fun with the predictor. If you're all about limiting your loss, taking your profits real quick, bam, you're going to do well. Look at the predictor flipping right here. So, right, you get into position when the predictor flips, take your profit quick because look, it broke right there. You could just take your profit immediately as soon as that next candle flips. But there is a way to trade this predictor. The volatility, the entropy, it's very powerful, especially when you go into trend. If you're dropping into trend, the prediction model's not going to change, right, until that trend is over, right to the top. So keep that in mind. But look, you're going to hang in this trade overnight. You're going to swing trade the 9 minute time frame overnight with SPY. I highly recommend not doing that. Highly recommend not doing that. 13 cents. Interesting. So when's this going to happen? When is it? 10:56. Well, that being said, we're going to wrap this up till tomorrow morning, 9 a.m. Eastern Standard Time. Hump day. Everybody get their hump on. It's coming in hot. I definitely want to thank everybody for the support in the Discord. We appreciate it more than you know, right? Because we're a small community. We love seeing the interaction. We've been getting a lot of views on TradingView this week. Appreciate you guys watching the videos. Hopefully you're getting something out of this. Please come join the Discord, right? First thing you're going to notice, like I said before, we're not trying to extract money from our community. You're not going to find any affiliate links. Find somebody else doing live streams out there that's not just like, hey, get in my ledger link, blah, blah. They're selling all kinds of shit. They got affiliate links everywhere. That's not us, man. That's not what we're about. We created this community so traders could interact and talk about volatility trading. Period. The end. If you see something along the way where you like the indicators, we got so many different options for you. The free volatility starter pack that can roll right into the free 2-week trial. That can lead right into where you are purchasing our indicator package. It's not even $100 a month. Pretty inexpensive, right? Pretty inexpensive. You a cigarette smoker out there? You like to have you like your drinky poos every day, whatever. Cut a pack a day. Cut a couple drinks. Stop buying Starbucks every day. Buy your volatility indicators. That's when people say, "Oh, I can't afford that." It's like, really? Tell me what else you afford $100 a month that you don't need. All right? Give me a break. Anybody can afford this. That's the thing. And little hint, you can literally make back what you paid for a month of indicators in one scalp using these indicators. So keep that in mind. You got to. Once again, we are Alpha Trading. We trade the VEPS, volatility, entropy, probability, and statistics. We are here 5 days a week, Monday through Friday, for the market open. You come into the Discord, you come into the TradingView chat, we will answer any of your questions. We'll look at any assets. And all that being said, wherever you live out on this big, beautiful blue marble, have a wonderful rest of your morning, afternoon, or evening. See you tomorrow morning, guys.